Hey everyone, welcome back. This is Joshua Thompson at Thompson Tax Group. Today we're talking a little bit crypto. We have Jackie here. She's going to share some information. I'm not going to steal her thunder. I'll let her share in a second. But once again, Thompson Tax Group, anything you need tax-wise, tax planning is what we focus on. Then also we have Chris Jackson here. Chris, you want to share a little bit about yourself once again?
Yeah, Chris Jackson, Cambridge Financial Group, helping protect what matters most, your life and your lifestyle and your wealth. So happy to be here also with Jackie and be able to learn more about cryptocurrency and how it fits in this day and age. 2022, here we are. And so the new things on the horizon for sure.
I know it's right there, man. It seems like the year just goes by before you know it. Like we just left 2020, we're getting in 2021. Now we're in 2022. Where does it go, man? But anyways, Jackie, I'll kind of pass the mic over to you and love if you just want to share a little bit about what you do, your background, just whatever you like to share before we get started.
Yeah. No, I appreciate being on and chatting with both of you. My background is very diverse. I am an attorney and I have been working as an attorney for over 20 years now. But I also am an educator and I love helping others learn about new fields and new things. And so it kind of ties into the crypto side. As everyone might see behind me, Crypto Mom 2 is a talk show that I do. And I started it when I started to dip my toe into the crypto blockchain space, because as a newbie, I was learning a lot. And since that time, there's always things to learn, but since that time, I've been interviewing people around the world. And I'm just blown away by all the creativity and the evolution that's going on right now within the blockchain.
Yeah, definitely. There's so much going on. And a lot of people say, crypto's kind of like when the internet first got started. There's so many comparisons that they're trying to do, but it's hard to compare to something that's never been before, to be honest. But really, I just want to get started with some simple questions. We'll try and keep this real simple for individuals that are just getting started. And then guys, definitely we're going to do something in the future where we get a little bit more into depth with the crypto stuff, but let's set the foundation. Jackie, I don't know if you mind just sharing. I think the biggest thing out there is you hear Bitcoin and then you hear blockchain. Do you mind sharing, explaining what the heck is a blockchain at the end of the day?
Yeah, sure. So the easiest way to visualize the blockchain, and again, remember I'm a teacher, so it's all about visualization. Yep. Think of it like Legos. So the blocks just kind of connect to each other, and within the blocks, it's like coding. It is coding. Basically, information is shared. And so the blockchain is huge. And it's amazing to me, everything that's being created on it, just like with the internet. Bitcoin was the first coin that was created. And everything else that's not Bitcoin is called an altcoin. And Bitcoin actually is going to end up being the standard. It's going to be the gold standard for a lot of other coins that are being developed. It has a limit in terms of the amount that will be mined. I'm also a Bitcoin miner. We can talk about that at a different time if you want. But just like our Department of Treasury creates dollars, in some ways, think about Bitcoin mining as creating the Bitcoin. It's computers that are solving the mathematical problem, and that creates the coins that people then buy in exchanges. So, for example, you might go to the bank to get your dollars. We would go to an exchange, an online portal, to get our coins, whether it's Bitcoin or another coin. And you would, in this new world, you could either buy a coin with another coin, or you can buy a coin with fiat, which for those that don't know what fiat means, that's like US dollars, your euros, the currency that a country will create. So, so that's a little bit of an overview as to what blockchain is and what Bitcoin is. Bitcoin was created on the blockchain.
Right. Okay. So Bitcoin was the first. I think it was Bitcoin came out, I want to say like 2009. Wasn't it somewhere around that time frame?
Yep, January 3rd, actually.
Oh, look at that.
It's the birthday of it. That's wow, what do you know?
Jackie, for someone that's just heard a little bit about crypto, wants to tip their toe into crypto, what do you suggest, or what do you see a lot of times people as the best way to get started?
Yeah. So I do cryptocurrency consulting. So individuals can reach out to me. And I know that you'll have the information, within your blog below for reaching out to me. I don't advise people on what to invest in. As a lawyer, as a mom, as an educator, I'm more interested in how are you, when you dive into it, how do you organize the information? How do you, when you first obtain that coin, are you keeping that, where are you keeping that information? And there's a whole list of steps and things that you have to think about. So what's your first question? The first question is, one, how do you buy some crypto? Well, there's a lot of different platforms out there. You have to be careful about what platform are you going to. Are you going to, and you have to figure out, is it a reputable platform? Because some platforms close down. So, so there's a few different steps. You have to figure out, where do you buy it? And then how do you buy it? So you have dollars. So now how do you transfer those dollars over to the platform? And it's not difficult, it's like any other wire, bank wire, but those are steps that you would take in order to get started. And you can also use your debit card or credit card. But again, you're online, so think about security, and that's why you need a good team. You need a team with a lawyer, an accountant, an advisor. There's different pieces you have to think about, because you're not just doing one transaction, it's actually a financial transaction. And that's also why I say, do your research. There's always risks involved, but if you're going to take that step, then know that since it is a financial transaction, there could be a consequence, a tax consequence, which is in your area, Josh, as to what happens after you get that coin, so I'm going to bounce it back to you, because I just shared a lot of information.
Yeah, I mean, when you're dealing with cryptocurrencies, there's definitely tax code, tax law you need to be concerned about or worried about, or have in the back of your mind thinking about as well. And it's something we could share as well in the future, a little bit now, but whenever you're doing or dealing with cryptocurrency, always keep a good record of it. Don't just rely on the platform you're on. Don't just rely on your wallet or the database with the wallet. Always keep an Excel sheet or written down or something somewhere that you have the idea of what you bought, when you bought it, how much you bought, what was the price of it then, and then when you sell it, that as well, so we kind of understand. There are programs out there that will try and take all that data for you and determine how much you'll be taxed at the end of the day. I have worked with them in the past, and sometimes it's fairly accurate, and sometimes it could be way off by thousands of dollars. So you definitely want to keep track of it every transaction if you can. I think that's going to be the best bet. Hey, Chris, I don't know if you have anything to share on that.
Yeah, you brought up security. Me knowing just a little bit about the space, I know there are different levels of security based on how you purchase it and how much you actually have ownership of said coin. For example, Robinhood versus Coinbase versus having your keys on a decentralized exchange. Could you explain kind of what the differences are and what you would recommend for someone who's just beginning?
Yeah. So let's see. So when you open up a wallet, I'm going to talk about a general wallet. You're going to have a few different steps. They're going to ask you, depending upon the wallet, they're going to ask you to KYC, which is know your customer. They're going to want to know who you are, and they're going to want to know what country you're in. The reason why they do that is that there are some wallets that are based here in the United States. There's some overseas, some are public, some are private. So there's some United States individuals can't participate with buying certain coins, while others we can. So in terms of security, when you first open up a wallet, some of them are app-based on your phone. Some of them are web-based, meaning you can do it on your browser. So there's those two levels. And then once you open it up, they might ask you for two things. They might say, well, what's your email? Or do you have a Google Authenticator? Because what will happen is that they're going to send you codes. For example, I'm a Bitcoin miner with VBit, and they send to my email and to my phone the same code. So that way, if someone is trying to access my wallet, I will know immediately on my phone, or I'll know on my email that someone's accessing. So you're going to get codes that you'll be able to put in to the separate from the keywords, which is, I'll get to in a second, which will allow you to go back into the wallet that you've created. So there's security when you keep going back and visiting. When you first create a wallet, depending upon the wallet, you're going to be getting a series of words that feel so random. If you don't write them down in the correct order, you can't get into your wallet. These are your backup words. So it's really important that you secure these words offline, which is why I created a crypto wallet organizer, because for your family members, a whole nother topic, for your family members who have no clue what you're doing, if they have to access your wallet in case of an emergency or in case something else tragic happens, they need to know what those words are to be able to access the wallet. They need to know the way that you access the wallet. So those are, and then sometimes you're gonna, like if it's a wallet on your phone and you need to disconnect your wallet, you're gonna need those words in order to reconnect it. So you're right, there's a lot of security. However, things can get hacked, and less likely than in other situations, but you also have to really protect your wallet code, meaning it's a whole series of little numbers and letters and stuff like that. And so because you can transfer money to and back from each of your wallets, but the thing is that you can also you have to protect your wallet, that is your wallet. So that's online. Now you also mentioned offline. So you have what are called cold wallets, and cold wallets means that it's not connected to the internet. It's warm or hot when it's connected to online. Cold is when it's like in your hand. There are a variety of new wallets. Ledger is well known, but there's another wallet that was just created by a Canadian crypto entrepreneur. It's called iHodl, and it's actually, you can put it up to it's Bluetooth. You can put it up to your wallet and it will transfer the coins. So you don't have the same challenges that sometimes happen when you're trying to do it the other way. Again, you have to do your research. There's a lot of things out there, and you have to figure out what's comfortable, because once you transfer your coins, if you lose that cold wallet, if you don't remember where it is, or you don't remember your passwords, that's why you hear those things about people losing their Bitcoin or throwing something out and then, panicking. So it's not like a traditional bank. You have to keep things secure.
Yeah, there's pros and cons when it comes down to virtual currencies, the decentralization aspect of it versus the centralization aspect, which would be like your banks. And just to be clarified, when we're talking wallets, we're not necessarily mean like a wallet here. It's a virtual wallet. So
virtual wallet.
And you can have a physical wallet, kind of like a ledger, which would be something like this big. And that's what she's mentioning is your cold wallet. It's not always connected to the internet. So that way you have a little bit more control over when you send assets. So that way you have this, you go on there and say, yes, I want to send it to this address. And it's harder to hack a wallet like that. I'm not going to say impossible, because there's so many things possible out there. But there's a lot of different wallets out there. You'll find probably hundreds on hundreds of different wallets, some cold, some hot, as in they're connected to the internet. Definitely want to be careful. The password that we were kind of talking about was the seed phrase. I think is the name of it. It was slipping my mind too, but it's a seed phrase, and it's either going to be usually 12 or 24 words, random words, and you want to write it down, because if you ever lose this hot wallet or it's ever stolen, it doesn't mean that they now have access to your funds. You could still recover it with your seed phrase, and you just have to be able to know it, type it in, and then you get access back to your wallet. And that's kind of the benefit of it, and the security aspect of having that seed phrase is you still have access to your wallet. Now, you never want to share that seed phrase with anyone, because if you share it, you can almost basically kiss your crypto goodbye, because someone could access your wallet and transfer it to themselves. So that password is something very secure. You want to keep it somewhere, preferably not anywhere connected to the internet. So that way, if anything does happen, you still have access to your funds.
And one thing that I would mention is you should have more than one copy of it. And in more than one place with possibly a trusted advisor, like whether it's a lockbox, or whether it's your executor of your will, or, again, you need to think about, like you said, that is your code to access your wealth, but you also need to think about who should have it in case of an emergency.
Definitely. That's just something that's extremely important. Chris, you want to touch on anything?
Just one last. I don't want to go dig too deep. This is the basics, but obviously, when I know what happened to me when I first got involved is you go on YouTube and you see all these people advertising all these different ways you can make money. There's yield farming and trading and all these things. What I came to find personally is, I think, especially be coming from a financial background, that if you're going to have any yield, be better to keep a little more control of it, like maybe stake something. Maybe if you can get a little yield that way, it's a lot less risky. But I don't know, what are your thoughts as far as once you have your crypto, should you just put most of it? I mean, you don't have to share exactly what you do, but do you put it all just offline, and you have, obviously you mine, so you get a little bit extra yield off of that. Maybe share some ways that you can get the most out of your crypto, and at what point do you feel like is a good time to sell, or do you use HODL, or what kind of thing would you recommend to a new learner?
So that's a lot all at once. One of the things that I would say for anyone who's new is sit on your coins. My plan, that's not to say I'm not going to sell or that I haven't sold, but plan on sitting. It's, this is a 10-year plan for me, because of the fact that, one, and Josh can talk about the capital gain side of it, but just like real estate, things go up and down. Don't get emotionally involved. And just like when Bitcoin started off at just a few cents, and then people sold it when it was $1, and last year it was up to 68,000 for one Bitcoin. Things are going to go up and down. I mean, I'm constantly getting emails from different crypto newsletters, and they had one article about if you invested $1,000 at the beginning of the year with 5 different coins, what would it be at the end of 2021? It was very interesting to see, but again, just like it goes up, it can plummet too. So you can't be attached to it. If you are going to be investing and then moving it, those are transactions that your accountant, like Josh, will have to advise you on, because there are tax consequences every time you go in and out of a trade, especially if you're doing it and it's less than 12 months. So you have to be aware of that. Bitcoin mining, I'm not doing that. People need to understand that when you hear the word mining, there is web-based mining and then there's physical mining. I'm not saying there's anything wrong with web-based. I don't have that confidence with web-based because platforms can close down. So when I started to do my own personal research, again, everything I'm saying is not financial advice, it's just personal opinion. I decided I wanted to be a rig owner that was physical, but I didn't want to have it in my house. So I found a company, and I'm also, full transparency, I'm an affiliate with the company as well, that it was based in Philadelphia, is based in Philadelphia. They also are eco-friendly. They use hydropower to mine in Canada, Montana, and Colorado. But the mining machine basically is similar to Visa, MasterCard. Visa, MasterCard, when you make transactions, get paid fees for verifying that the transactions are real, not fraudulent. The Bitcoin mining rigs verify that when someone goes to Coinbase or one of the other platforms and they're buying $10 worth of Bitcoin, that that's a real transaction and not a double dip. So when the rig says, yes, that's a real transaction, then that person gets their $10 worth of Bitcoin, and my rig gets paid a transaction fee, which is in Bitcoin, and that drops into my wallet. So basically, I'm like the bank for Visa, MasterCard, but instead of a fiat, it's Bitcoin. So I like that because I feel it's like an apple tree. It keeps dropping in apples as opposed to going to the supermarket where you're just getting a bag of apples. Everyone has to make their own personal decisions. There's a lot of things in the blockchain that you can invest in, not just coins. You can invest in NFTs. You can invest in, well, real estate soon. But I mean, there's a lot of things happening within the blockchain. So everyone who's new has to take the time, do their research, and don't be panicked by the markets. Slow down. There will be coins that are going to go high. There are going to be coins that are going to go low. Only put in what you're willing to lose.
Yep.
Again, this is a risky area. And so you can make money, you can lose money. Don't put your rent money in. Don't put your food money in. Again, it's again, be cautious about everything.
Definitely. And be diversified, no matter what you do. Even when you're getting into crypto, diversify. Don't put, 100% of your money on one specific coin. What they say is DYOR, do your own research. You'll see that everywhere in the crypto space. Read the white papers, learn. That's kind of the biggest thing. Learn before you jump in, because a lot of people tell you when they first started and they try and send money from one wallet to another wallet or somewhere else, they don't verify it's on this chain versus that chain. Your money could disappear if you don't know what you're doing. And you definitely want to get educated before you get in there and start making transactions. You want to verify everything's correct and works in your benefit.
So you said two things I just want to clarify. For
Yep.
those that don't know what a white paper is, a white paper is like the business plan for the platform or for the coin. It will give you the history, it'll give you the vision for why that coin was created and on what platform it was created on. Bitcoin, no one can create anything on Bitcoin. So the second coin that was created is Ethereum. So look at these coins and some of these platforms like roads. You have major highways, you have smaller roads. Some of these highways you can create malls on. And so there's going to be like Ethereum. You can create all these various businesses on Ethereum and coins, but again, so there's that. But then like you said, there's different chains. Those chains are just different roads. And if there's not a connector between the roads, then your coins get stuck. And so that's why they have these little access roads to allow you to maneuver the coins from one side to another. And they're not always user friendly. So you're right, your coins can get stuck, and I've had that happen where I needed to kind of figure it out. So
Yeah. I mean, if you're in the crypto space, if you're in it early on, you probably have seen it once or twice or something like that happen. But it's real important to kind of learn a little bit more. It's kind of why we're doing this show, and we're definitely going to invite Jackie back to do another one where we talk a little bit more about it, dive a little bit deeper, clarify anything that you guys may have questions on. Good, email me, Chris, Jackie, and we're happy to answer any of your questions. Jackie, before we head out, is there anything you want to last things you want to add or say or mention, and if you don't mind letting everyone know how we connect with you?
Yeah, sure. Thank you. I appreciate that. If you want to reach out to me to ask any questions, I don't charge for the consult. It's cryptomom2consulting@gmail.com. And I also have a website that's called cryptomom2 as well. So you'll be able to find me online. I would say, think about who's on your team. Do you have a lawyer like myself who can just kind of give you some guidance? Do you have, an accountant, a CPA like Josh, who can advise you on how do it's easier to set your paperwork up early than to try to do it at the end of the year. Or do you have, a financial advisor like Chris, who can, also give you guidance? Again, your team helps you be successful. And if one of your goals in this year is to explore your own personal wealth development, then you need to think about all the aspects, so you have to have a good team, and the team does not have to cost you an arm and a leg. So again, think about how you can have advisors that will help you and support you in your long-term goals.
Yeah, definitely with that. Well, Jackie, I appreciate it. Chris, do you have any last minute words for everyone?
No, that's great. Well said, Jackie, and we look forward to talking to you again soon.
Yeah, I'm excited about this.
Yeah. Well, Jackie, appreciate you being here with us today. Like I said, we're going to do this again. Super interesting. We may just have to do one where we all just sit down, just take 2 or 3 hours and just kind of go over things that we're involved in, all the platforms, all the things going on out there. But our goal is here to educate you guys so you guys can have some information, because it's not, at the end of the day, it's not just taxes. It's not just finance. It's just not legal stuff. It's all those plus more bundled together. And you just want to make sure you're fully taken care of. That's why we kind of do these, to help educate our clients, you guys, on these topics at the end of the day. But Jackie, once again, thank you. Chris, thank you. And looking forward to having you again.
Have a great day.